Welcome back. A bunch of stocks moving well from the broader markets. Havells has moved to the high point of trade along with a couple of other FMCG names. We have Dabur, Godrej Consumer, all of them doing well as well. But let's shift focus away from stocks and talk about the big thing that happened over the weekend. The RBI surprised the country by announcing a withdrawal of 2,000 rupee notes. Latha joins in to tell us more about this. But more importantly, Latha, everyone's confusing this with the demonetization that happened a couple of years ago. What's the difference with this and demonetization?
Yeah, I think it's very important to know the difference because that's why there was so much of confusion, fury, anger over the weekend. The important point to note is what was announced on May 19th, that is Friday evening, is a note withdrawal, which means the note continues to remain legal tender. It is a means of exchange and people will have to, or at least banks will have to accept the money. Whereas in 2016, what was announced was a cancellation of the notes. That is, they are no longer worthy of buying goods and services. That is the clear difference between what was announced on Friday and what was announced 2016. Also amounts, there are a variety of differences. The amounts in the Friday cancellation, about 3.6 lakh crore worth of notes are being withdrawn. In 2016, it was 15.4 lakh crore. So that was a very big shock to the system. Again, in 2000, on Friday, the time allotted has been 4 months. 4 months for a relatively smaller amount of money makes the process much smoother. Last time it was not even 2 months. If you remember, November 8th to December 31 was all that was given. And again, this time, this is not a means to check out who has unaccounted money or flush out that money. So the process is very smooth. If you have notes, you don't even have to show your identity or anything like that. Whereas in 2016, clearly it was to identify who were the people who were stashing money and maybe in some way even bring them to book. Data was kept by the banks and the tax authorities were expected to follow it up. That's by way of difference. The big thing we need to know is what is the impact. Now, immediately I can tell you in the bond markets, the impact is the one-day call money, the rate at which banks borrow from one another, one-day money, that has fallen. And that's very important because that's the starting point of the entire yield curve. And across the yield curve, shorter-term paper have all gone down by a few basis points, 5 to 10 basis points. The longer-term paper has gone down less. Now, what could the impact? Why is there a fall in bond yields? There are a variety of views that have come from economists. First, I'll take the Citi view. Citibank's view is not much money is expected to enter the deposit, the banking system. They believe that mostly people will come and exchange their notes because, after all, why did they keep notes? There was a felt need for it. So they will come and exchange, and therefore the banking system, the deposits may increase by about 10 or 20%, and that is expected to, push down the short-term yields. They also point out that there can be a decent amount of buying of jewelry in terms of the economy because many people, or at least a few people, may not want the bank to know that they have stashed this as cash. They would expect tax authorities to hunt them. So it's quite possible that they will spend the money rather than come and deposit it. There is also an expectation that because there will be excess liquidity in the system, the Monetary Policy Committee, which on June 8th was expected to remove the term withdrawal of accommodation, may continue with it because there is plenty of liquidity and it will need to be withdrawn at some point. Kotak view, they are expecting much more money to come back into the system, probably 1.5 trillion, about half the money. Again, all these are guesses as to how people will behave. They also believe that durables, this demand may go up. But more importantly, they say as deposits come, banks will not have to raise their deposit rate because they already have excess money. And that will mean margins will continue to be good as they were in Q4. They also point out that it was expected that the Reserve Bank, as the liquidity lessened, would do open market purchases of bonds to push in liquidity. All that now gets postponed way into the latter part of second half of the current fiscal. And finally, a quick word by Goldman Sachs, mostly repeating this. They also expect short-term yields only to go down. And the rest of the system, not much of a difference because in all probability, after a couple of months, people will withdraw the money. So it's only a short-term impact on liquidity.
So for someone like you and me, if you have a 2,000 rupee note, you'd rather just go to a bank and exchange it because as the date comes closer, people may although it is still legal tender, you may not be able to use it anywhere. So might as well just go and exchange
as it is, there are lots of shops you must have seen on social media.
They don't
people
accept,
saying that hereafter we will not accept 2,000
Yes.
rupee notes. Actually, even otherwise, 2,000 rupee notes were,
Few and far between.
People were resisting it.
Listen,
Anyway, how many did you have? I had
didn't have
one,
any.
and I could give it off to a petrol pump.
You know,
I don't think anybody could have too many.
I haven't
notes.
seen too many in circulation either, actually, in the last couple
The
of years.
only stat that I'm looking at right now is Zomato saying that since Friday, 72% of their cash on delivery orders were paid in 2,000 rupee notes. So, of
Okay.
course, a lot of people had.
So everybody did
a lot
want
of
to go to
2,000
bank
rupee
and wanted to
notes
get rid of their one or two notes.
buy their
Whenever
stuff
they
on
can.
Zomato.
Yeah.
All
You
right.
don't have to go to a bank in which you have an account, right? Any bank will.
To exchange, you can go to any bank, but if you want to deposit in your account, obviously your
Yeah,
account.
you need. Oh, right. Okay, thanks a lot, Latha, for that. Actually, very helpful clarifications on several issues with regards to the 2,000 rupee note. Let's slip into a quick break. On the other side, Manisha Gupta joins in. She has Chirag Seth of Metals Focus with her. Do stay tuned in.